Hey guys, welcome back, and if you're new to the channel, definitely welcome. What I do is I'm using Wealthsimple Trade, which is Canada's no-fee trading app, which is a really awesome way to get started with buying and selling stocks in Canada. I'm using this app to buy dividend-paying stocks, and I'm building up this portfolio. So if you subtract the cash that's available, I'm sitting at a stock value of $16,600, and I'm just trying to build up a source of passive income from dividends. And yeah, I'm just adding in a little bit of cash here and there and buying one stock at a time, which works really well using Wealthsimple Trade because you don't pay like a $10 trading fee or something like that, or a $5 trading fee on every single stock, because if you buy one at a time, you just get destroyed with that. So I really like Wealthsimple Trade for that. And yeah, in this video, I'm going to basically, let's take a look at the portfolio, I guess. So in the last day, there's 0% change, or down $67, I guess. How is that 0%? Ouch. In the last week, we're up $51. In the last month, we're pretty much netted out at zero, down $34. And there we go. So in the last 3 months, so we've just had a little bit of turmoil in the last month or so, but overall in the last 3 months, up 7%. In the last year, we're up 12%, and I think I haven't had this account yet for even a year. So yeah, that's basically the whole time. But that's pretty nice, up almost $1,800. That's just from dividends coming into the account, and also the stock price is just really increasing. You can see a lot of the stock prices here have gone up, with the exception right now of the renewable energy companies. So AP.UN is down 7.07%. Everything else is up quite high. This is another renewable energy company, it's down. This is another renewable energy company. All of those ones seem to be down right now quite a lot, but that's okay. Everything else you see is just positive, up in the green for a lot of stuff here. Intergex, this is another renewable energy company. They're all down right now. And Northland Power as well, down 11%. And the rest doing pretty well, I'd say. So what I want to do today is, normally what I like to do is I'd like to buy stocks on the red days, but I'm like really heavily invested in renewable energy companies, and so I'm just going to like pull back from that for a minute. And I wanted to add in some shares into this one, actually, Allied Properties. So I'm up almost 10% on this position. If we take a look here at the 5-year, they have this nice run, and yeah, they were hit hard last year and they're slowly recovering. Like I said, I'm up about 10% on this, but that's okay. I want to add in more because I'm hoping we can get back in on some of this trajectory. But when we look down here, at the moment they're paying a 3.94% yield, which is pretty nice. There is one thing that concerns me though. So if we just switch into Yahoo Finance and take a look at their chart here, you can see they're pretty much always paying out their dividends, which is nice. They just missed like a couple in this point for some reason, but like a good history of paying dividends. But when we look at the price here, let's zoom in a bit. At the moment, they are paying 0.142 per share, and they did increase since earlier this year, or late last year. But even when you look up here, when their stock price was significantly higher, they're pretty much paying the same thing. Like their growth rate in their dividend payout is like extremely, like non-existent almost. It's very slow. So while I am hoping to get some stock price appreciation here, I'm not really looking for this to, like, as their stock price goes up, that they're really going to like honor that with increasing the dividend. However, I've done some research into the company and I'm pretty happy with their business model, and I think I'm okay with that as long as the stock value goes up, because in the future, if I ever want to shift things around, I'll be able to sell them, and that'll be some pretty good value for me. But that said, I want to pick up 2 shares today. That's going to make up about a third or something of what I have to spend today. So we're just going to go and push buy, and we're going to place that at a market order. So there we go. We're going to just hit done. And yeah, let's go back into the portfolio and look at what I wanted to get next. So I think the next one that I wanted to pick up today was also another REIT, and it is REI.UN. And here, when we take a look at REI.UN, you can see that, let's just skip straight to the 5-year. Yeah, they're slowly climbing back up for recovery. And when we come down here, we can see I'm personally up 18%, which is amazing. I bought in like somewhere down here, and it's been just climbing quite a lot. But I still personally think that they have more room left to climb. They have a yield at the moment of 6.18%. I think that's actually not correct. Let's jump into Yahoo Finance. Yeah, it's actually like more like 4.67%. So I'm not sure why Wealthsimple is reporting it a little bit too high. But if we look at the chart here, and then let's maybe zoom in into the last 2 years, I guess. You can see they're always consistently paying the dividends, and they cut them though. So here now they're paying 8 cents per month. and before they were paying 12 cents. And that was consistent with basically what they were doing before. And so if we zoom out a little bit again, them again, like they're not really increasing the dividend over time very much, like just barely. But at least now, I know that like if I'm buying in at this point, it's like a reduced dividend because of everything that happened last year. And I'm hoping that when they come back up, if they come back up to kind of this level, that at least it will get restored about 30% or so. So that's going to be nice if they do restore that. And otherwise, once we get back up to that level, it's not exactly like a dividend growth play. It's just cash flow. And given that it's in the tax-free savings account, you get to keep all of that and just like have that earlier to reinvest into some stocks, which is something I'm okay with. So for these guys, they're a little bit cheaper. So what I want to do is I'm going to take 6, and I'm also going to put that through at a market buy. And I'm going to place that order just now, and hit done. Okay, cool. So there should be a little bit left in the account. And I'm actually just going to wait a few minutes to let this clear, because Wealthsimple Trade holds 5% for like a couple minutes until the market order goes through, and then this number should update. So I just waited honestly like about 30 seconds, and then that updated. So the last thing that I want to do here is just come back into the portfolio, into the tax-free savings account. And I did want to pick up 1 share of NPI. Like I said, I don't want to jump too far into the utility companies that I'm already heavily invested in. But where are they? They're down 11%. And I'm pretty sure they're just going to keep dropping. Like, I wouldn't be surprised if you look at a lot of the charts of the renewable energy companies. They're just like, I don't know, they're just tanking right now. But given that they are 11% below my average price, I think that's okay with me. I'm just going to add 1 share just to bring down my average price again. And if they continue falling, if they fall again and they stay below 11% or even more, then I'll probably consider like averaging more and more into them as we go. So they don't have as strong of a yield at 3.17%, but they're also paying monthly just like the REITs, which is like not that common with utility companies. And let's actually take a look at Yahoo Finance as well. So when we look here, they're like also, they're crazy inflated at the moment. Maybe let's zoom in a little bit to the 2-year chart. So at the moment, their dividends are 0.1 per month. And actually, if you go back, they don't really like change that much, which isn't an extremely good sign. Let's maybe go back 5 years. You can see here, man, like 3 or 4 years ago, there we go. They finally increased. That was a 10% increase, which is not bad. But they're not growing that much very rapidly. So and again, this one is more like just getting some monthly cash flow and taking advantage of that 11% discount, but also not exactly like a dividend growth stock. Definitely they have room for, like a capital appreciation. If this does happen to continue and they somehow stay at a level up here, that's pretty nice. But just getting a little bit extra monthly dividends here and a discount on the dividend. And I just have enough for 1, so that's fine. I'll just put 1 in at a market order and just place that. So cool. Let's actually jump into the spreadsheet now that I use. And this is just a Google sheet that I made that I track a little bit more information than Wealthsimple is providing. I do love Wealthsimple for the ease of use and the commission-free trading, but I just find that I like the control and making some charts and things like that. But yeah, basically, let's take a quick look here. I haven't spent the money yet, so it's all the same numbers, but basically before I made the trades, you can see that my annual dividend income from the whole portfolio is about $662, and the average yield is sitting at 3.99%. So what I want to do is I just want to log the transactions in here that I just did, and make sure that I'm putting in the actual price that I paid, not what I thought I paid on the market order, but what I actually get in the notification for what was filled in the order. That comes from Wealthsimple Trade. But then I just jump back into the summary and just double check to see what is going on in here. All of the dividends that we just got on the new stocks are like relatively close to this, and I haven't put in enough. It was only $250 on 16,000, so this doesn't change, but the annual dividend income has increased. We were sitting at 662 before, and now we're at 672. So the annual passive income from dividends has gone up by $10 per year. Doesn't sound like much maybe, but like every week I'm adding more and more to this, and so it's always climbing and climbing, and by the time, later in life, this is just going to be like an unstoppable snowball basically, which is what I'm going for. So yeah, I think that's pretty much it, guys. Thanks for watching. If you like the video, drop a thumbs up. Do consider trying out Wealthsimple Trade. There's a link in the description below, and also for the spreadsheet if you want to try those as well. But definitely look at Wealthsimple Trade because you can get $10 just for signing up and giving it a go. So yeah, guys, thanks a lot, and I'll see you down in the comments.